What is it about August?
The beach was boring. It really is if you look at it, the complacency sets in, people do actually go away, and frankly, there are problems that tend to get papered over and wait until September. It just so happens that we're in one of these environments where if you look back over the last year, when yields have moved to where we are now, you've had equity market turbulence, whether it was September with the UK turbulence or March when the yields peaked above 5% in the 2-year prior to the bank crisis. And here we are again. And should we really be surprised given the downgrade, given the excess supply, and given the fact that Japan is now actually going to compete for funds in a global asset allocation framework?
You've gone through a few points there. There's so many things going on in this bond market, and it's hard to strip out what's driving it and what isn't. The downgrade, the data, the Treasury supply, the fact that BOJ has tweaked yield curve control. Does it matter why we're here, or is it just the fact we're here on Treasury yields right now? Do the reasons behind the move matter at all?
Well, look, there's always the longer-term picture is given the supply that's been announced, that is a reason, and obviously to us that is a reason that the rate of descent, should we get the economic slowdown that Ed Hyman is forecasting, is likely to be lower than expected. But the fact is, when you think about it from an equity market perspective, from the bank crisis trough till a week ago, the NASDAQ was annualizing at 100%. It's just not a surprise that we're pulling back here.
Taking a step back, what you just said is that at this point, yields are making stocks queasy, right? I mean, that's essentially where we're at. And this has been one of the big questions. Why have stocks been so resilient as yields slowly climbed upward? This hasn't been a massive sudden move, as John was mentioning. So have we gotten to that tipping point where suddenly yields shift the narrative at a time when people still are talking about economic resilience and cause stocks to really look queasy, even if the economic data comes in well?
So from our point of view, this is a correction as opposed to an end of the run. And that's really because when you step back, even though we are looking for a recession sometime over the next 12 months, the data doesn't support that in the here and now. And if you look at the history of the stock market, it's very often the case that things keep going and going and grinding higher until you're hard upon the recession. And I would also point out, when you think about it from a supply and demand point of view, the public, who is a large holder of these stocks that have done so well, of these stocks that are reporting after the close today, doesn't have to feel forced to sell their shares as long as they have a job, and the jobs market is very strong, as we know.